business is kind of growing, you have some income coming in. How do we balance, growing our salary or what we're taking home versus reinvesting in our business? This is, like you said, this can be a hard one because to make our business better, grow faster, grow differently, we could maybe need more money, but at the same time, we want to be taking money home to start or maybe being able to live a little bit more than the rice and beans we were putting ourselves on in the beginning. How do you kind of think about that change over time or even starting?
Yeah, I tend to think of don't bring money home unless you have. But one of the things to keep in mind is if you're able to keep funds in the business, you're able to allow those funds to grow and multiply much more than you would of being able to go out to restaurants more frequently or maybe go on a vacation or something like that. But you do have to find that happy medium to say, where is that point going to be for us in terms of, hey, I can reinvest this versus I really want to bring this home, or my family really is looking forward to this something because we've been working so hard for so long. Get it. So let's make sure we're reinvesting in your family. It's going to be a different decision for everyone. But as a general rule of thumb, if you can keep the funds within the business and allow those to reinvest and build back into even greater and better things for your business, you're going to be better off.
Yeah. Yeah. And that's, talking about a business that is growing in value too. So you can be growing the income, but at the same time, you want to be able to earn what you should be able to earn doing the job that you're doing, whether you're doing it for yourself or whether you're doing it for someone else. So kind of what is this market salary? As you grow, you start to be able to maybe put things in place where you can make those decisions a little bit easier. But I think in the beginning, it can be hard. So you really want to weigh how is this going to benefit me versus if I take this home, do we need it? When we talk about getting paid a salary, that's just like if you're working in someone else's business, you're getting a paycheck. So you've got these payroll taxes, being deducted from that. You want to be deducting, your federal, state income tax, all of that. Versus, if there's excess and you say, okay, I'm getting my salary, but there's still some extra in the business. There's still some profit. Do I want to take this out? Now it's okay. Well, do I just take that out of the business and I don't pay tax on it? You pay tax differently, but you don't have those payroll taxes on the funds. And so now, this is where as a business owner, how much am I taking out? How am I taking it out? This starts to affect the tax implications of this. So these are some of the pieces that I think, are harder. I guess one of this is it's a tough balance, and this is where you pay taxes differently, depending on how you take money out of the business. So one of the benefits, if you don't have to withhold payroll taxes on that paycheck, so if you're kind of taking maybe more in distributions, but still a good amount in a paycheck, one thing to keep in mind is that paycheck that you are withholding payroll taxes on, which includes Social Security taxes, is later in life. Your Social Security benefit is based on the wages that you did withhold, Social Security taxes for. So it is important to this is kind of when we're looking for clients, the now versus the later. As a business owner, it's easy to forget because you're like, I need to take home what I can today. But also just remember, you don't want to decrease that paycheck too much to the detriment potentially of a Social Security benefit later, because Social Security does cover a decent amount of expenses. It's not meant to cover everything, but just balancing those are kind of the things you need to keep in mind. So whether you're talking with your accountant or if you have a bookkeeper, things like that are good conversations just to be mindful of when you're balancing how much income and how you take that out of the business. So
yeah, and kind of what you're talking about there is one of the big financial planning things that we help clients that have businesses kind of run through, right? Is the whole idea of salary versus distribution, and this mostly comes into play for business owners that are S corps, right? Because if you're a sole proprietor or you're an LLC and taxed as an LLC, because LLCs can also be taxed as S corps, but either way, if you're a sole proprietor or an LLC, all of the income that the business comes in, that the business brings in, is essentially going to flow through to you. And unfortunately, you're going to owe self-employment taxes on that. And that's basically both sides of the FICA tax, the 7.65. So it's a total of 15 plus percent. So, and that's not great to have to pay that tax. Whereas I think what you're alluding to there is when you are an S corp, you have the ability to say, well, my salary is this. And even if my business still brings in after my salary additional money, well, that could be considered a distribution instead of salary. But the one big key component there is always reasonable comp, because the IRS knows to say, well, just because someone's an S corp, if you're running a business and you're only paying yourself $10,000 a year to run that business, the IRS is pretty wise to say, hey, hang on, that doesn't pass the reasonable comp test, or the sniff test, if you will. But the other thing you're also alluding to is, let's say you set your salary. Let's say you're an S corp. You have $100,000 of income that's coming in, but you only set your salary at $10,000, and 90% of that, or 90,000, is distribution, not subject to the Social Security and Medicare tax or whatnot. Well, you're also hurting yourself in the future is in retirement years. Well, now you're working off of an earned income figure of $10,000 instead of potentially 100, right? So there are multiple factors at play that you want to make sure that if I pull this lever a certain way, what's going to be the impact downstream of three other things? And it's really important to have conversations with trusted individuals around you to work through that.
So once we kind of get past this point and we've got salary, income coming in, now we start to think, okay, our business is maybe maturing a little bit. And so now we start to think about, well, what are other things that my business could be covering for me besides just getting a salary? Are there other things it could be paying for? And is this, financially beneficial for my business to start paying for some of these things?
Yeah, so the big ones that come to mind are retirement plans, what that looks like. So if you are a single person, or maybe it's just you and your spouse that work in the business, one of the things you can look at using is a solo or an individual 401k. And the costs on setting those accounts are really, really low. The administration is really, really low. We've helped a number of different clients set those up, but they offer kind of the largest available beyond defined benefit plan. They offer the largest annual contribution limits to be able to get funds into those accounts. So in that account, you basically can save $23,000 a year in 2024. If you're over age 50, there's a catch up for $7,500. The rules are going to change pretty substantially for 2025, but only to the benefit. But you can sock away a lot of money on a pre-tax basis using that account. So retirement is a big one, but there are other options beyond a solo 401k as well. If you have owners, you can still do a 401k, but now you're introducing administrative cost for hiring the record keeper, the third-party administrator, and stuff like that. But retirement plans can still be a wonderful advantage. The next big one would probably be health insurance, and that's something that at least in the US here, we are really well trained to get our health insurance from our employers. And I know that there's been some change and some movement away from that here in the past 10 years or so. But the recognition is most people do get their health insurance either from their employer or if they're retired from Medicare, right? So now if you're going to look at a health insurance plan with your business, now you're going to have to work with a broker to see, okay, well, what is this plan going to look like? There are some state available options that you can work through. There are different rules depending on what state you're in, but most of them are pretty well documented. But let's just say you're going to work with a broker and they're going to help you pick this insurance plan over that insurance plan or whatnot. One of the first things that's hard to think about or be mindful of is a lot of these group plans, you have to meet a certain minimum number of people before you can even enroll. And 3 has been a number that's been touted around just to get the plan started. It doesn't always have to stay at 3. But if it's just you in the business, it could be really hard to get a group health insurance plan through one of the big names if you don't have more people covered. So the other alternative is to say, okay, can you go back to the marketplace? But that's not necessarily going through the business. So following health insurance, then we're just going to keep working down the list of disability insurance. That's something that I really encourage clients to take a look at doing, especially if you are a solo business owner. Because now you're getting to the point where if you're looking at employee benefits and having your business cover them, generally speaking, your income is well enough to the point where you're not, scraping by, right? So your income is growing through the business. It's starting to become profitable. But if you're still a solo shop, now you're in a situation where if something happens to you, how are you going to continue bringing funds into your house, in the event of an accident, right? And this is an accident where you might be paralyzed or you can't work for a little bit. Disability insurance is paramount and super, super important, and I think often overlooked. as an employee benefit to look at. And then the final big one I would tend to think about is just life insurance, because there can be some tax advantages with getting some life insurance through the employer, although it falls off after you increase the face amounts and whatnot.
So even further, what happens as a business owner is you just have to keep thinking about this. What do I do with this excess? What do I do with this now? What do I do with this now? And over time, you're adding things that you always want to have in place. And not every expense is deductible or is fully deductible. So it's not that if I spend $1, that decreases the profit in my business. So that's where it's very important to know which expenses are deductible, which expenses aren't deductible. So you've got to understand, if I spend $1 here, that's going to help with my taxes here.
Just to make sure it's super, super clear, because I've talked to a number of people and even friends that own businesses, and this is just a hard concept to grasp, right? So just to put it really simple and clear, if I have a $50 lunch that I'm going to take some friends out to or something like that, first and foremost, it has to be a business purpose, right? You can't just be hanging around and, carrying on with your friends and stuff like that and not have a business purpose for it to even be considered a business expense. So it has to be related to your business. So if you have $100 of income, well, now because of that lunch, you potentially at most could have $50 of income, 100 minus the 50. But oftentimes with meals, one of the things that's often overlooked is those are deducted differently than a lot of other expenses. If you paid for office supplies for $50, that's generally 100% deduction. But meals are a 50% deduction. So you're not even getting the $50 as a deduction. You're only getting 25. So
well, that's why I think it's important just to touch on, because I think there is just kind of this misconception of like, well, business owners, you can just write it all off.